Oil Daily Forecast, December 28th, FXEmpire.com. Fueled by comments coming out of Tehran that the Iranians would close down the Strait of Hormuz if the EU chose to put an embargo on Iranian oil imports, the oil markets reacted in a bullish manner on Tuesday as fears of supply disruption came into being. As you can see on the daily light sweet crude chart, we did break above the $100 mark and actually tested the very top of the downward channel that we've been watching. Having said that, there are two things that you should be aware of in this move. The volume is almost non-existent this time of year, making the moves maybe a little bit more exaggerated than they would be normally. Also, the closing of the candle was below the top line for the channel. Considering this to be a breakout is probably going to be a little premature at this moment in time. Having said that though, we are still tracking the potential downward channel and also the potential flag that this market, bullish flag that this market has been showing. A serious move to the upside would have us buying and holding onto a core position in this market, while a down move of any kind would have us selling, looking for a return probably back to 92.5 or so, as we would continue to consolidate with a little bit more of a downward bias. The Brent markets aren't quite as clearly defined in where they will go next, only because the most recent action only has us right up to about the center of most of the consolidation for the second half of 2011. Because of that, there just isn't enough for us to get overly bullish of Brent at the moment. If crude oil does break out, we believe that the light sweet crude market will have an easier time moving forward. With this in mind, we aren't particularly interested in the Brent markets currently, as a sheer amount of noise in this area will more than likely weigh upon the market in either scenario. There will be some buying down here if we fall as well, so it could be very choppy in the Brent markets. The oil markets will be influenced by dollar strength or weakness going forward, as well as this drama unfolding in the Middle East. However, if you look at the demand for oil, it is actually fairly weak in a lot of the emerging markets. Also, one would have to think that the Iranians are willing to risk a real war with the United States and Saudi Arabia if they close the sea lane down. The likelihood of this is quite slim at best. Because of this, we ultimately think this Iranian noise will turn out to be nothing and may provide a shorting opportunity as it did the last time they mentioned closing down the straits.